Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. Today I'm joined by Tony Alfonso, Managing Director of Covitus Capital. Tony has spent over 25 years helping companies understand what they're worth and guiding them through major financial moves like buying, selling, or merging with other businesses. He's worked across many industries, helping leaders make smart, confident decisions about their company's futures. Welcome to the show, Tony.
Thanks, Tim. I appreciate it.
All right. So, how long you've been here in the Valley? About as long as I have, almost 20 years.
Yeah, that's makes us almost makes us natives.
Yeah, I mean, honorary. My kids
Honorary
were born
natives.
here, so
Yeah.
I feel like, yeah. Are most of your clients based in Arizona?
All over. I've do work all over the country.
Okay.
But the type of work that we do kind of fits the Phoenix market. A lot of owner managed businesses and the like. And quite frankly, those are the type of companies I like working with.
Okay. So why don't you give us a snapshot of what Covitus does, but also your specialty within the company?
Yeah, sure. So Covitus Capital is an investment bank. We're a registered broker-dealer with FINRA, so we have all the nice financial regulations that we need to comply with. So when you think about an investment bank, that can mean many things to many people. So, if you think about what we do, I try to keep it simple. We like talking to companies or people that are in some form of inflection point. Basically, something is going on with them or with their company.
Okay.
So if you think about from an investment banking perspective on what we do, typically that usually means either a sale, a restructuring, or an acquisition. Those are kind of the top three. Most of the work that we're going to do is on the sell side, meaning, you have a company that's founder owned and managed, and it's time for that founder to retire. Maybe that founder's kids have their own careers completely unrelated. They could be doctors in different states, or they just don't want to be part of the business, just not the right fit. So it's time for a sale. So it's time to find a buyer for them. And it could be either a strategic buyer, so basically a company that's very similar to them and can see them as a good bolt-on to the company, or it could be a financial buyer. Someone's going to try to find a rate of return, and those are typically like private equity funds, family offices, and the like. Right. So it's really just companies that are, at an inflection point. There's something's happening, and they need us.
Right. Okay. And so, speaking of founder companies, they often that's their baby. They care a lot more maybe about it than like a private equity group who's maybe been at the helm for a while or something. But depends upon the size too. But if they really know the employees and it's a family and stuff, what percentage of those do you see go the route of like an ESOP?
That's a great question. And I'll address a couple things that you had mentioned is, founders are very proud of their companies and they should, right? And by the way, we also do a lot of capital raising and for a lot of early stage companies. And so this comment this is a good comment for both. Okay. So typically when I look at a client, whether it's for sale or for or if we're doing a capital raise, I work with the client and I feel that my job is to keep things real, just like, that's just the way. Got to keep things real. And as you mentioned, the founders are proud of their companies. Right. And so I have to take the view knowing that I'm either going to have to help them sell the company or raise capital for this company. So I keep it real by taking an investor's point of view.
Right. Pragmatic, not emotional. Right.
Not emotional. I didn't spend the last 20 years building this company up. I'm in love with it. And they should, absolutely. But sometimes you need an outside view to kind of keep things grounded. So that's the direction I take when I deal with clients. I try not to give any false expectations, try to keep things real and just start trying to keep expectations in check. Now there are, you had mentioned ESOPs, and that's certainly an avenue. There could be just an outright sale, as I had mentioned, but then an ESOP is essentially the same thing, but the owner is selling their equity interest into the ESOP, which is managed by a trustee, and then those shares are given to the employees, typically on a vesting schedule. So what it does, it kind of gives those employees, and ESOPs fit very well with companies that have a lot of like line workers, a lot of blue collar type workers, and like a cement company, a manufacturing company. And what it does is it gives the employees, it gives them a sense of ownership, a pride of ownership, pride of the work that they're doing, because they're now owners of the company. So it helps obviously the founder. The founder was able to monetize, but it also keeps the company, the equity within the company, within the employees, and it can be very lucrative for them. If they stay and the stock, the value of the company continues to go up, not only do they have a financial interest in the sense of a salary, but they also have a financial interest in the sense of equity in the company, which, could be significant for the people that stay there for a very long time.
Okay. So, but and back to the original question about how frequently do you see that?
It seems to come in waves, and you're starting to see more of an uptick of things going into the ESOP realm. I don't know if I have exact numbers on it, but I would say at least 30% of the deals on private company and private company.
Oh wow, that's more than I thought. Okay.
Yeah, I said private, but I mean smaller owner managed companies. Like I misspoke a little bit. They're starting to really explore the ESOP transaction.
Okay.
ESOPs don't work well with companies where the assets go home every day, meaning professional services companies, right? Because you're not really, producing a tangible product or anything, but so I'm not going to say it hasn't happened, but it really works better for like the more bricks and mortar manufacturing type companies where people kind of working on the line. It gives them that sense of pride and sense of ownership.
Okay. Very cool. So what are some of the, before we get into the challenges, misconceptions of investment banking and helping companies in that, like founding companies, what would you say are the capital needs when you said you have to raise capital for some of those?
Yeah, so we do some capital raising. So capital raising can range from large infrastructure. Data centers are huge, as you can imagine, with AI, all that fun stuff. So data centers are huge. So we can do larger infrastructure. Those do take a lot longer, just the nature of them. But I've been doing a lot of like the early stage. So from startup, usually kind of at the startup Series A level securities, and working with those are a little more challenging because they tend to be technology companies, and you have to differentiate. Do they have a business or they just have an idea?
Right.
You can't raise funds for an idea. Right. That has to be bootstrapped. You're going to put in your own capital, sweat equity, all of that. Early stage, they might have a product. They might just need that capital for funding to be able to expand, into a different geography. I would say the ideal candidate and still considered a startup, these venture capital firms, when they're looking to invest, or if you're looking for angel investors to invest, they want to see a proof of concept, first of all. Again, differentiating between idea versus business.
Angel versus seed round versus
Exactly. And then two, ideally they want to see some revenues to show that there's there's commercial acceptance. Some of that early stage biotech, that's very difficult. Typically it's a doctor that thinks they have a new compound. That's a tough raise. You have to go through FDA approvals. Is it really commercial acceptance for this product, this, that, or whatever? Right. Those are more challenging. Those are typically just bootstrapped and
painful and slow and risky.
Crossing your fingers. You have the FDA, all those various levels of approval. So, but I would say the hot industries, cyber, and then AI. That's usually where the venture capitals are putting
Okay.
their money, is in cyber security
Okay.
and AI. AI is the buzz.
SAS.
Everyone talks about it. It seems like if you don't say AI, you're kind of left out in the dark. Um,
Yeah.
and so that's kind of where we are on the capital raising, but early stage companies.
Okay. Okay. So what are some of the bigger challenges you're seeing right now in in this part of the market cycle?
Yeah, so we were very fortunate for the past, let's say, 15 years or so of having a record bull market, low interest rates, and
Hmm.
deal flow was out the wazoo. It was just
Right.
crazy. So we're in a little
Capital
bit.
was cheap. Yeah.
Capital is cheap. So we're giving some of that back right now.
Hmm.
Normal economic cycles, I think, people have short memories. They forget that things go up, but they also go down.
Yep.
So, and I think we were in that, I don't want to say a down cycle. I think that's not 100% correct, but capital is more expensive. It's as
Hmm.
simple as that. Deals are taking longer to get done. An M&A transaction used to take 6 months. It could take 9 to 12 months.
Okay.
Capital raising could still take a while because, the founders, the money's coming in. If it's on a debt deal, is more expensive, or they just don't want to give up as much equity in the company.
Right.
And I think they
Right.
need to be prepared for that. So I
Right.
wouldn't
Also,
say, go ahead, please.
I was just going to say, well, I'll speak for real estate where, yeah, it depends on the asset class, but pretty much down market. And, office was been a down market for the last few years. COVID really kicked that one pretty hard. But I focus largely on multifamily, which most major markets had a down cycle, right? Some of the
Yeah.
Midwest seem to do pretty good, but uh, depending on the market and the asset class, there's some clear telltale signs that some of them are out of it, right? Class A in some markets have been the valuations have been going up again anyway.
Yeah, and like I mentioned, it's just from deals are taking longer. The eh, eh, again, I wouldn't call it a down market, but I would say we're in a holding pattern.
Okay.
Now it's like I'll call it a wait and see market. Um,
Right. Well, the economy, despite a lot of headwinds, is still pretty good, right? It's that weird what I see the GDP's still doing well, but jobs are going down. It's just weird changes that we haven't seen before.
yeah, it seems like all economic models have been broken. And,
Right?
I've never been a big believer that the stock market itself is a big indicator of the overall economy.
Okay.
I just never had. I don't think they're perfectly correlated, like people say, because the stock market could be reaching record highs, but the overall economy, you have layoffs, you have this, you have that, you have what do they call it? The no hire, no fire economy that we're
Mm-hmm.
kind of in. But the stock market kind of continues to go up. So I've
Right.
never really been one to say there's a one-to-one correlation
Sure.
between the two. But yeah, I think I think, the economic cycles, there's a lot of uncertainty,
Right.
a little bit of chaos, and the markets don't like
Right. Yeah, no,
chaos.
I didn't appreciate it when growing up, they'd always talk about how we were well, we're a consumer economy, but that how important consumer confidence was. And I didn't appreciate that until I've gotten older and been in this in the world a little more.
Yeah, I've had these conversations with a lot of people, and it's I find it interesting that we have, I'm not trying to get overly philosophical here, but we we are we have this diminishing middle class,
Hmm.
and unfortunately, I think it's going in the wrong direction. I mean,
Right.
it's going, the have-nots. I'm not going to sit there and say it's extreme like some third world countries where you're either a maid or you have a maid. But
Right.
I would say we have a shrinking middle class, and I think it's unfortunately kind of going into the wrong direction. And for example, one of my vices, if you will, are just looking at watches. I love watches. They're cool, mechanical. I just like things that are mechanical. But just talking to some of the folks kind of in that market, the people that have stretched to buy the $8,000 Rolex in the past,
Mm.
those buyers have disappeared.
Right.
The ones buying the $100,000 Rolexes or other watches are still there.
Right.
So on the upper end luxury goods, those are still flying. Those are that market is
Right.
still working. The middle class
Right.
ish, upper middle class who can still
Right.
spend 8 to 5 thousand for a watch, that's starting to,
Right.
it's
You
taking
actually see
time.
that a parallel may be the job market, right? Where you have established engineers are making even more than ever because they're more productive than ever than AI, but new engineers are not getting hired. There's a fear ease, right? So it's another separation at that level.
Yeah, it's hitting multi facets of the economy and the job
Right.
market. So it's fascinating just because I kind of geek out over these things and I get
Mhm.
philosophical, but then sometimes it also gets depressing. And I'm not a glasses half empty type person. I try to be very pragmatic about things.
Right. But your point, it's chaotic and there's a lot of unknowns, a lot of new weird things.
That's right, exactly right.
Mhm.
The tariffs, then you never know what happens. It's usually kind of, the administration brings it, does tariffs to bring people to the negotiation table, then
Mhm.
kind of back off. But
Right.
and time will tell on whether that's good, that they're not to be good or bad for the economy. That's not something that happens overnight. But nonetheless, it's creating uncertainty. And
Yep.
that's what happens is people don't like uncertainty. So I think that's kind of what's
Yeah.
really holding things up a little bit.
Right. We're emotional creatures.
Yeah. You
Well,
like
you
to
say
see.
it's hard to raise capital right now for like so right now we have one of the best deals I've had in a while. Right now we're going to close in a couple of weeks in Texas. A great submarket in North San Antonio. Cash flows day one. It's awesome. It's great. 25 losses. For it checks all our boxes, right? It's really good. But people are like, oh, but aren't we at the bottom of the market? Aren't values down? I'm like, yeah,
Yeah, I think
exactly.
yes, but
You
they're
get
still
it. It's
afraid.
on
I still gotta
sale.
sit and hold, right? Yeah.
Yeah, exactly. This is the time to buy it. And like, or when the market's at the top, everybody wants to buy the stocks. You're like,
Yeah.
no, this is reversed.
Yeah, it's just I think we're in interesting times and I think we're running into this again, I'm getting a little philosophical here, but I have these conversations with a lot of people that
Mhm.
I actually think that, well, not I shouldn't say actually, I do think that part of this diminishing middle class is also that and I'm not going to trash the education, the upper education, because I have a master's degree and
Yeah.
all of that fun
I have a
stuff.
PhD. You can trash it. It's okay.
Yeah, no, but I think we forget about the trades,
Oh,
and
sure.
I think we are as an economy, long term, we're going to have a shortage in the trades because we've always sold that.
Potentially. I know enough. I have some of my investors were in the trades, right?
Yeah,
They did well. They've had exits or something. And I know, and they're bringing up, there's some good entry level positions there, six-figure salaries coming into the trade. That's the free
yeah.
market generally balances that stuff out, right? If you make that much, more people go into it. So I'm not, what I'm excited about that the trades is because I think that's going to be one of the harder ones for robots to replace.
Well, you're absolutely right, and where I was going with this, and maybe I wasn't overly as clear, but when we graduate high school, we're always thought like you have to go
Oh,
to
go to school.
college,
Good. Yeah.
right? Two kids, golden retriever, white picket fence house. That's the definition of Americana. That's the dream, right? So
Right.
everybody feels like you got to go to college and do that. That's the dream. Um, but that's not for everybody, and there's nothing wrong with that.
And
Um,
it's not what it was either, by the
it's not
way.
what it was. Costs are through the roof.
Yeah,
You're 50 plus years old before you're done paying off all your student debt.
right.
But
The rate of information increasing, like half of your degree is expired by the time you leave.
exactly,
Things
and,
like
and
that.
and it turns out you learn most of your work by doing it after you
Right,
graduate, which
right,
is kind of what the trades are, right? Is that you get an
right,
apprentice, you learn how to be a welder, and if you have the right business acumen, you start your own company, right? And
right.
then maybe you start a welding supply company and it grows and it grows. That could be the next generation of billionaires.
Hmm.
There's no doubt. So I just think the trades are kind of underserved.
Right,
And you're right. It's that's probably that piece of the economy that will not get taken over by AI.
right,
You know,
right.
AI is not going to come under your sink and fix a leak or weld this or that or whatever. Still
Not anytime soon.
not anytime soon. Okay. Maybe when
I,
we're dead and buried, okay, fine, we're not here anymore, but not anytime soon.
right.
But
I've seen some robots do some pretty impressive stuff lately, but yeah.
yeah, the robots are pretty impressive right now. But yeah, but I hear what you're saying. But yeah,
Right.
it's just, so I think I think that's an area of the economy that's it's underserved and underappreciated.
Right. Right. Okay. Okay. Good stuff. So, in talking about, okay, we've been talking about investing, back to sort of personal, success and challenges. This is a new question I like to ask some guests is what have you done in the past, year or so that's changed your life?
Oh, wow. You know,
Right.
clearly I didn't prepare. I was not prepared. We don't
Well,
prep for this, and that's good.
yeah, it can be professional or personal or whatever, but it's given me some really great answers, so I love to ask it.
Well, it's personal and professional. It's a
Okay. Okay. Yeah, it's often it's kind of legacy based in my mind. It's things that, are changing the way you're thinking about things even, much less, what you want to how you want to have
um,
an impact.
I took 6 months off, took a
Oh,
sabbatical,
really? Okay.
and I was able to travel without a laptop for the first time in 25 years.
Oh, wow.
To be able to
Nice.
travel internationally with just the cell phone and
Okay.
not having to check the emails first thing in the morning.
Right.
Um, so that was great. And in a sense, it was a bit of a reset mentally and professionally.
Sure.
Meaning, guess what? The world still goes around
Yep.
when you're not there. Okay, so keep that in
Yep.
mind. When you're no
Yep.
longer
Yep.
there, the world is still spinning.
Yep.
Um,
Irreplaceable. Things will keep going on. Yeah.
I think you're the greatest person in the world, but guess what? Everything's still going on when you came back. Uh, so that was great from a just a reset and a I don't want to say soul searching, but you're sitting there like because prior to this I was your typical corporate slave, just working 24/7, especially I grew up in professional services. In
Okay.
professional services, the only thing you can sell is yourself and your intangible product, and you have to be responsive because
Right.
it's they're going to make the next call to the next person. I'd like to say
Yep.
that I'm super special, but what I do is not proprietary. It's just finance is not proprietary. I wish it was, but
Right.
it's not. So
There is trust there and competency and like you said, being responsive,
yeah,
right? And
and I kind of have a rule. I don't work with people I don't like, and I would think that the people that don't like me wouldn't work with me. So I try to be
right.
likable, responsible, and direct in a good way.
Hmm.
Direct in a good way. I wouldn't not necessarily not sugarcoating things, but also not giving you false expectations.
Sure.
Try to level set the expectations. But after taking those 6 months off, and it's like I was one of those guys like, I'm going to work forever. I'm just a workaholic. I'm going to work forever. After taking those 6 months off and sitting there, it's like, this was kind of nice. So
Okay.
it kind of resets like what's life goals. And the life
Right.
goals, you know what? Retirement isn't going to be all that bad. Um, do I think I'll ever not work? No, but I might, when it comes to retirement, I might do something completely different.
Okay.
Think that's not work that I can, that I don't consider work. I don't know what that is yet, but I'll
Right.
figure it out when it gets there.
Right. Right. Yeah, it's a journey, right? And keeps the path keeps winding as you discover it. But it's something I've sort of come into as well. Having kids leave the nest and other stuff, you start thinking about meaningful work, right? What's worth your time at this point?
Yeah, yeah. And my whole career has always been finance related. Just, finance, I can do all this math in the back of my head, this, that, and whatever.
Mhm.
But, when it's time to call it, right, I'm still going to work, but I most likely would not have anything to do with numbers.
Really? Okay. Okay. I was thinking maybe you'd be like I had somebody else on my show, Elena Z, and some other people who they sort of give back by training, teaching, right? Kids and other sort of endeavors, and they go in, they get some personal reward out of helping others in that sense with their specialty. They're not diving deep into the stuff like you're doing, but anyway.
No, that's no, I no, that part I fully believe in. I actually enjoy that part. I feel like, giving back to the community, whether it be local community, ecosystem, or whatever. It's like I've been
Right.
that believer. It's like, you want to leave something better than you found it. And
100%.
I've guest lectured a lot in different universities, which I enjoy.
Yeah.
Uh, and the reason I enjoy it, I try to tell these students that you don't have to have it all figured out right now.
Right.
And I talk about my career. I did not think I had no idea I was going to be doing this. I found it and it just worked out. So
Okay.
don't feel like you have to have that plan of, this and this and this is going to happen by this. And if it doesn't happen by then, I'm a complete failure. No, not at all. I
Right.
always say it's not how you start, it's how you finish.
Right.
And but I like giving back by having these, talking to the students. It's all off, it's in the finance classes, don't get me wrong, but I just like giving back to kind of let people know that you don't have to have it all figured out from day
Right.
one.
Right. Yeah, that's awesome. That's awesome. You have a lot of impact in your work, helping people and with their challenges already. But that's another level of being able to do that, which is great. I'd say, um, like a third of my investors are high income medical professionals, things like that, and they sacrifice so much time and energy and effort over the years. By the time they're actually, maybe paying off their student loans, maybe not, but they're thick in the practice and they're going, and now they're a totally different person from when they started the journey.
Yeah.
So that
Well,
what they are envisioning for their life is different now than it was before, and hopefully it's still somewhat related, but some of them it's not, and they just leave and they quit and do something else.
yeah, doctors aren't the greatest business people. I've dealt with them all the time. I deal with them all the time, but not the greatest business people. It's not their fault. They just haven't been trained that way, right?
Yeah.
Go to medical school, right? They're not trained how to run a business, how to,
Right.
do the collections, and obviously all the insurance stuff, which completely,
Oh, billing.
yeah,
Yeah.
just overcomplicates it. But in medical school, they don't teach them how to run a business, run your own practice or anything. So
Right.
yeah, it's just one of those, one of those things.
Yep, yep, for sure, for sure. So, all right, final reflection question for you, Tony. What do you wish you knew sooner about building wealth or success earlier in your career?
You know, I think slow and steady,
Yeah,
slow and steady. When you're younger, you always want those big hits. You're excited, you're young. It's like, I want them, because you always see that one person that got lucky and became a millionaire by the age of 30.
right,
You
right.
know,
That's interesting that you say that. I had recently, I don't remember where I saw it, but that wasn't historically kind of a mindset for younger people. It was always because successful, wealthy people were old people, right? Whatever. And it was more interesting about what do you do? How cool is your job, right? And it wasn't until like the 80s when you saw these young millionaires start propping up. And that's when everybody started focusing on more on how much do you make instead of what do you do, which I think is an interesting shift in our culture.
yeah, yeah. Then, going into the 2000s and you see those Bitcoin millionaires, right?
Hmm.
People just got
Bitcoin bros.
Bitcoin bros, and I've dealt with, with plenty of those type. But yeah, I think slow and steady. It's not as exciting, but it's
Right.
safer and it kind
Tried
of
and true.
tried and true, and it kind of gets you there. So yeah, I would say if anything, just kind of, if I would have known slow and steady, then also like again, nothing, you don't have to have it all figured out on day one.
Right. But little consistency compounds, right? It
Yeah,
really,
yeah,
yeah,
yeah. It's
yeah.
just consistency compound. Because it took me a while. It just, when I went to school, I changed majors 3 different times. Right. So
Okay.
until I found my calling, if you will,
Right.
and
Right.
it actually sticks. So again, you don't have to have all the answers now. And you never will. Right. Don't be afraid to ask and help and be
Right. Keep
truthful if you're not the expert in something.
Right. Keep growing. Keep that mindset. Awesome.
Exactly.
Okay. All right, Tony, if people like to connect with you or learn more, where can they go? What should they do?
Yeah, Covitus Capital, and that's Covitus. That's covitus.com. Or you can give me a call, 480-938-9100. Happy to chat with anybody. And just really quickly, my email is talfonso, that's TALFONSO, at covitus.com.
Awesome. All right. Thank you. Thank you, everyone, for watching and listening. Thank you very much, Tony Alfonso, for joining us and sharing your insights into your industry. Appreciate it.
Appreciate it, Tim.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.